Joining me now, Scott Martin, Rebecca Walser, Susan Lee, Ashley Webster. Let me just develop this theme about lower gas prices. Scott, if we're right here and prices really come down sharply, will that help A, the economy, and B, the market? Scott Martin.
Yes, definitely, especially when it comes to consumer spending, Stuart, because we know, we've seen history tell us that when gas prices go up, that's like an additional tax on the consumer, and it takes away spending that goes to other places. So as you talked with Gas Buddy's guy just previously there, the fact that I think oil prices, too, I agree, are going to hang out around this level, if not go lower, because we have an energy policy for the first time in, say, I guess, decades in this country, means good things for the consumer over the summer.
What do you say?
Really does. Our good friend Scott Shellady always says it's one of those things that has the most quickest direct way of putting more money in your pocket. And if we stay at this level for some time, it does make a difference, especially in the busy driving summer season.
And it just makes me happy. So
yes,
there you go.
A smile on your face.
As simple as that.
And it also makes companies happy as well, since it cuts down their expenditures.
Sure.
And given that we saw, I think, the lowest read when it comes to private sector job ads last month, in the month of May, I think the economy might need it at this point.
Well, it would be nice if it gets a little flipper. That would be good stuff. However, the major averages, stocks have been on a 2-day big-time winning streak. Rebecca Walser, come on in, please. Do you think, have you got that feeling again that the market just kind of wants to go up?
I think so, Stu. They are bearing all of the weight of everything that has happened. Of course, the Federal Reserve's comments this week have been very helpful, and gas prices are super helpful and certainly deterring any kind of tariff talk right now. So I'm really excited about that, and I think the investors are feeling the same sort of excitement.
Well, it's not exactly an exciting opening, I've got to say, because the Dow is up all at 2 points as we speak. Nice gain for the a little bit of a gain for the Nasdaq. So at the moment, it's steady as she goes with the Dow up at 3 points. I want to talk about Amazon. Look at the stock. It is down again today. Amazon is off. They're going to begin delivering packages by drone, here's the quote, within months. In other words, here it comes, within months, drone delivery. Susan.
Well, this was expected. You know, they actually lost the lead when it comes to FAA approval for drone delivery to Alphabet and Google's Wing. But here we go. It looks like they are ready. And they said that they will deliver packages under 5 pounds to customers in less than 30 minutes. Can you believe that?
Well,
30 minutes.
And drones can fly up to 15 miles.
I haven't got the details, but it has to be rural areas or
I would
certainly
imagine
outer
so.
suburban
Well,
areas.
at first for testing. But don't forget,
nobody
Jeff Bezos.
orders anything.
Well, Jeff Bezos
Where nobody orders
already said that he would do this in 3 to 4 years, just about in 2013. So on target, shall we say.
Not helping the stock. I'm not surprised by that. Amazon, along with Google and Facebook's been under pressure because of government threats of antitrust action. Bear that in mind. By the way, Amazon's down to 17.29. And the big board now shows, again, steady as she goes, not much gain, 9-10 points up there. Let's get back to Google. They've just closed a deal to buy a data analytics firm called Looker. They're going to pay $2.6 billion. No impact on the stock. In fact, the stock, again, because of government antitrust pressure, down some more. Hertz launches a $1,000 per month car subscription service, maintenance, roadside assistance, some insurance coverage, all included in that price. No impact on the stock. Smucker sales miss the mark and the stock is down 5%. Higher profit and sales at the discounter, 5 below. 2 investment firms have raised their price target for the stock and it is up about 2.5%. No major moves that we've seen thus far. How about Beyond Meat? No, not a major move. It's actually down a couple of bucks there. The stock's been on a tear since the IPO. Now it's going to report profits later today after the closing bell. So, Rebecca, did you buy it on IPO day?
No, I did not. But the best IPO in almost 2 decades, so far. So it's obviously done extremely well. And but a little concern here, Stu, about just the valuation. The $6 billion market cap, when that's 29 times the sales they expect this year. So this stock has to perform for a long time in order to actually justify its valuation.
Scott Martin, do you think that Beyond Meat has peaked?
it's a little beyond reality at the moment. But here's the thing. I mean, the company doesn't even make money yet. Though, I'll tell you, the food's good. I mean, I hate to say it or I guess I should say it as a carnivore myself. I mean, the food actually tastes pretty good, and it can trick people into thinking it's real meat. So I got to give them props there. The only thing I tell you, though, is that this space, given how well they've been doing and given the fact that you have McDonald's and Burger King and these other restaurants talking about using them, is going to introduce more competition. So as Beyond Meat gets more competition, that's probably going to impact the stock to the downside.
You realize, Scott, you just said the food's good and the stock dropped 0.5%, but I'm not blaming you
There you go.
at all.
I should have said the opposite.
Right. Susan.
Barclays says that the meatless trend in this meatless market will be worth $140 billion over the next 10 years. So right now we're at $14 billion. So there's growth being priced in. But again, valuation, I think, is important since we're looking at a loss of $7 million expected after the close. And we're sitting at a valuation of close to $6 billion. I mean, you have to really figure that out.
That's an extraordinary prediction, though, is it? How much? 100 billion, did you say, in how many years?
140 billion in 10 years.
140 billion in the meatless
It'll grow 10
marketplace.
times over a decade.
In a decade.
Okay.
Okay. I'm not sure about that. I just don't know. It wouldn't surprise me in the slightest. Shall we show everybody? Yes, we are. Google, as in Alphabet. They have the YouTube division, of course. They're going to get rid of what they call hateful videos and hoax videos. It's kind of like, I mean, how do you do that? I mean, how do you decide? You've got to have a team of censors all over the place.
Think of the money it
costs money.
costs.
And
Yeah, what do you say there, Scott?
Yeah, I mean, like Susan said, sir, I mean, think of the money and the people power this is going to cost to just monitor this stuff. I mean, look what's happened with Facebook Live stuff. When they were even aware that stuff was getting posted or that, people were doing things on Facebook Live and taking them down and then people would repost them. I mean, it's a hard thing to catch up to. So not only on cost and people, but it's also something that just goes to show you that this problem we're facing, at least at these social media companies, is a lot tougher to kind of rectify than I think we originally expected.
Ash?
they have rules and policies, but consider this. More than 500 hours of new videos are uploaded every minute.
500 hours every minute.
Every minute.
I don't know how you monitor that.
It's very hard to get your hands around that.
Monthly visits of 1.5 billion people. So
How do you do it?
It's very hard.
Rebecca, let me bring you into this, and here's the question to me. Amazon, Google, Facebook, all facing the challenge of being looked at by the government on antitrust grounds. Would you buy any of those three?
I mean, long term, I think, Stu, they're going to work out. They do have massive platforms that everyone uses. But I am concerned certainly about censorship competition. Censorship is a problem, and this is going to get resolved, I think, eventually at the Supreme Court, whether these are publication platforms or they're not. And it's going to be resolved at the Supreme Court, and it needs to be, because when you start getting a private group that basically is the only group you can go to, that kind of platform, a Google, a Facebook, and certainly a YouTube, and then you decide, you have your internal people decide, and they're talking about borderline content too now. They're going to even remove borderline content. So who is that? What does that mean? Right. What are the rules there? And that's just a big problem for our democracy and for everyone. I don't think that we need somebody else deciding what content we can and cannot watch.
I got another big picture question about car companies, automotive stocks. The news here is that the proposed merger between Chrysler and Renault is dead. But Rebecca, back to you for a second. I wouldn't buy any automaker stock anywhere in the world at the moment, and I'll tell you why. There's just so much capacity to produce cars which people are not going to buy. I wouldn't buy an automobile stock. What do you say, Rebecca?
Yeah, I mean, Stu, you're right. This is sort of reminds me of the U.S.-China negotiations. They went into the boardroom thinking that they were going to have a deal that they negotiated with the French government, and they found out that it was really Nissan that was pulling all the strings. And, that is the problem here, is that Nissan was not on board. They have a long-term alliance of 20 years. Renault owns 43% of Nissan. Nissan owns 15% of Renault. And they share platforms, and they needed this deal, they thought, because of electric car making, expense, and battery operated cars and self-driving cars. They were trying to get into a alliance that would basically allow them to do that and compete in the future. And Nissan is really putting the kibosh on this.
Okay, we're out of time, I'm afraid. Rebecca and Scott, thanks for joining us. It's that 9:40 Eastern time. There you go. We'll see you again real soon.